はい、この時間は、伝説の投資家ラリー・ウィリアムズさんゲストにお迎えしまして、最近の動きですとか、これからの動き、そのようなところ株式市場を中心にですねお話を伺う予定になっております。Welcome to the show, Mr. Williams.
Thank you. My pleasure so much. Thank you.
It's been a last time we talked about a year ago. You talked about years ending with the threes and years ending with the fives. And this is the 2014. 2013 certainly did have a really spectacular market as far as the stock market is concerned. Now, 2014, we're kind of scratching our head on where we go from here. Well, how is it so far, you think? And probably like on S&P, 2014 has been progressing, you think?
We're still in a bull market.
Okay.
And we're going to go higher. I think we'll continue to make new highs in here. There's been a lot of accumulation in the market. Typically, right at the end of March, we see prices rally in the U.S. So I would expect to see a breakout in here, a rally further into June. But after June, I think we've got a big decline coming in the market that'll set up a buy point in October, September, but up June, July, down.
Okay. I have let's go to the chart here. We have 2013. We had S&P up about 30%, and now. Thus far, 2014, we are talking this at the last week of the March, and S&P's kind of started having
but you're looking at just price.
Yeah.
If we look at just price, all we see is a reflection of price. But I know that there's been a lot of accumulation coming in this market. As we look inside the market to see who's been buying this, there's been a lot of more stocks advancing than declining. That's bullish.
Okay.
Volume coming in here on the upside. So I think we're going to break out to the upside. I'm long. I hope so.
Okay. Well, but then can we just go to the chart here, and we especially like a month of March, we kind of stagnated because like very hard, very thick resistance on the top side on S&P, and I guess we basically 2014 you were expecting we have a big correction coming in.
In 2014, I think that starting right around the 1st of April, my stuff says we move a lot higher.
Okay,
we just
so
break out of here.
Up.
We're under accumulation. All that we're seeing in here is just a holding pattern, ready to accelerate a move. And that looks very bullish into the May-June time period. I mean, after all, usually stocks rally in America, especially around April 15th after we pay tax.
Okay.
So I think there's a rally in our future.
Right.
But the next big move is to the downside. June, July, August, September, that will set up a great buy point for later in the year.
Okay.
So I want to be long until June, July, then I'm going to be on the short side.
Okay. So, from a perspective of preparation for, because we are expecting really another spectacular market in 2015, we are looking for how we set ourselves into the market for 2015.
Exactly. 2014 is a setup as I see it. 2015 is going to be a rip-roaring big bull market.
Okay.
Just as was 2005 was, as 1995 was, as 1965 was. In 2015, you want to buy all the big breaks in the market, never sell the rallies, because we're going to be in a big upturn like we saw in 2003.
Okay.
That's, I think, the program for 2015. It starts, though, in the fall of this year. The 4-year cycle turns up, yield curves turn up. There's a great buy point coming.
Okay. One of the things that has not happened, like if 2015 was quasi repeat of the 2013, 2014 thus far, what has not happened was a correction of the market.
We had that first correction, boom, but came right back.
Yeah, 5.8%.
Everybody's afraid to buy it.
It's a scratch in a skin.
Look at all these pullbacks we've seen in this bull market. Everyone's afraid to buy it. It looks to me like we're in a bull market. Is a trend up or is a trend down? It looks like it's up. So you want to be a buyer of corrections in this market and breakouts. And like I said, we're going to break out to the upside.
Okay. So we're going to have the middle of 2014. We're going to have a correction in the capital letters.
A good buy point. How much we come down, I'm really not certain, but the big play to me is I think it will be a vicious decline. But in September, October, with interest rates from 2 years ago, the yield curve turning up, money supply is going to be strong again, interest rates will be low again. That's going to set up the stage for the 2015 bull market.
Okay.
That's where you want to be long and stay long.
Okay. If you can't go along with the short, just make sure that you go along with the long side.
Correct.
Of the market.
Right.
Okay. Another thing, 2014 is that especially like now, after December FOMC, 2013 FOMC, we have 3 FOMCs in a series of in a consecutive accumulated like $30 billion got off from the table with the QE, and then we're expecting by fall, probably like October, we'll go QE zero. So there's no punch bowl in a party.
Oh, I think there is.
Okay.
The United States government cannot let the economy fall apart.
Okay.
And our economy is still shaky. So will they increase interest rates? No, they can't do it. Will they decrease money supply? No, they can't do it anyway because they're spend anyway. They like to do that. So lower interest rates, not higher interest rates. We're still going to see moderate increases in money supply, not a drastic cutback. That means lower interest rates, bullish for stocks.
Okay. That means that, last FOMC in March, they were talking about, Janet Yellen was saying that, they're going to go down to zero on a QE in a 6 month, considerable time. 6 months later, they will start touching, meaning that they will raising interest rates from 0 to 0.25 up. And I think market was expecting a Fed fund rate going up in April. In the spring of 2015.
So let me just ask this. Do you really trust what the United States government tells you? I don't, and I'm a U.S. citizen. They mislead us.
Okay.
They never come out and say buy stocks, or sell stocks. They have all this artificial talk about these things. So you know what? I watch what the big money is doing in the market, not what the politicians are saying with their mouths. And based on that, I think we will continue to see lower interest rates, and we're not going to have any massive cutback of money supply.
Okay. The Japanese government do say buy stocks, and
Japanese government does, yes.
Well, certainly
they did last year when I was here.
Right. Certainly, Federal Reserve doesn't. But okay. So I guess at this point, some of the assessment, some of the a cold water in the back kind of a situation that the people are expecting, market is expecting like if Federal Reserve raising the rate a little bit earlier than they thought, and it's not going to happen. Probably will not happen.
I don't think we'll see interest rates on a very short-term basis. I think bonds are going to decline in here, slightly higher rates, but come May, that's going to stabilize. And we're not going to see the rates that the gloom and doomers talk about going back to the Jimmy Carter era, something like that. It's not going to happen. We can't do that. It'll kill the American economy. It'll kill the economy of the world. So don't worry about substantially higher interest rates.
Okay. Well, another thing that 2013, I want to go to a long and short question. Before I do that, 2013, one of the things that happened was for first time in a long time, Warren Buffett and those people who buy and hold kind of guy really made it in 2013. Peculiar, but
only in the American market. That didn't work in China, did it?
Okay.
It was marginally successful in Japan, pretty good in Europe, a disaster in Turkey, not good in Brazil.
Okay.
So you still have to be market selective. Country selected, the economy. So the leading markets have been the DAX in Germany and in the U.S. I think that's the telling signs of the future, and those will bring up the other markets. So those are the markets I'd be interested in. I certainly want to be, say, in the Russian market or Chinese stock market, the Shanghai index. Whoa.
Okay. Well, the Chinese, we have, it's a attention of the market that it's kind of losing the steam, and that was supposed to be like engine of the market, engine of the globe.
It's supposed to be the new economy of the world, wasn't it? And we know that the stock market is the best leading indicator of the economy.
Right.
Given that, well, how good's the economy in China? Now, to be fair, there are really two indexes in China. The Shanghai index paints a different picture than the index of their growth stock. So I need to add that. But the economy is not as robust there, and there's lots of problems.
Okay.
So I think that has to get worked out, and that's why the emphasis on countries like Japan and America. People that invest can trust the figures that corporations give. That's not necessarily true of China, of Russia, of Turkey. We saw the debacle on the Turkey Stock Exchange recently. So people that have massive amounts of money, billions of dollars to invest, want to go where it's as fair a game as they can get. That's going to be countries like Japan, like the United States, like Germany.
Okay. Well, so it's not, it is a strategy, but also, I don't know. Along with the strategy, I think the market that you choose is crucial.
Absolutely crucial.
Okay. All right. And the reason why I said that was like 2014 may have been a Warren Buffett's year, but the 2014 maybe with the stagnation.
2014, whatever you learned last year won't work this year.
Right. Yeah, that's what I was saying.
And last year was like buy and hold. This year's going to be up, back, down, so it's going to be choppy. And it's going to scare the bulls out, scare the bears out,
Right.
and then the big move starts.
Right, that's what I was going to say, like a 2014, maybe a short-term, mid-term, king of the short-term, the mid-term trading, Larry Williams kind of strategy would work in the 2014. And for 2014, we talked about 2014, but like I want to do a little bit about, because you cover so many different markets, so many different countries, and I want the viewers to, be satisfied with you touching some of them, okay?
Sure.
So just make sure, this is alibi kind of thing, but just make sure you have touched. I'm going to do a long and short kind of question,
Great.
okay? So stocks, U.S.?
Higher. Intermediate term higher, then lower,
Okay.
coming June 15th.
Okay, so for 2014. You mentioned about outperforming in the DAX, but the European stocks?
They'll continue rallying, but they'll also have that summer sell-off.
Okay, they kind of tag along with the U.S. market, don't they?
Very much so.
Okay, Japanese market, Nikkei, for example.
Japanese market's going to continue to trade. It'll be higher. It's going to have a good 2015, but I think it's a trading range of fair right now.
Okay. And, you touched on this, but China, stagnating China.
China, I want to stay away from.
Okay.
I can't trust the figures there. The market's not moving like the economy appears to be moving. There's a lot better opportunities in other global situations.
Okay. Also, at least this stage, first stage of the 2014, the market volatility generator, Russian stocks.
Oh, disaster.
Okay.
Because Putin has put himself in a position where he now has a lot of economic pressures from the United States,
Right.
from the Euro complex. So now he's got problems. What's he going to do? And the one thing we know investors don't like is uncertainty.
Okay.
Putin represents a heightened alert of uncertainty. So I wouldn't want to be in Russian stocks at all.
Okay. All right. And let's go to some of the commodities market, the gold.
Down.
Okay.
Intermediate term. I think we're going to see a nice, really good buy point in gold about August 15th, somewhere in that time period. But we've had this great big rally up in gold now. It went short a week ago. I expect intermediate term gold's going to continue coming down, then set up a really nice buy point, but later in the year.
Okay. I'm especially if the market, if Federal Reserve's QE0 kind of scenario is a little bit different from the market expectation, gold is going to really spark, I think. Because it's been suffering.
Gold's an interesting beast. It doesn't go down when we have depression. It doesn't go up when we have depression, kind of sits there.
Right.
It really is independent. There's a lot of commercial production of gold and using of gold. I think that's the driving force of the market. On top of that, you have the emotion of the gold bug, the
Right.
gloom and doomers.
Right.
So they have these heightened things as the market peaks, as it did a week ago. So they're the wild gyrations. But the commercial usage and supply and demand, it's a real market.
Okay.
There's real supply-demand figures there.
Okay, well, you have to understand how the gold speaks. Gold language you need to speak, I guess. WTI, the crude oil.
Crude oil, I think is a great trading range. I do
Okay.
a lot of trading in crude oil. I'm in, I'm out. In terms of a long term, not like it was 8 years ago. I think we're going to bounce around, especially in America now with the Balkan Basin. We've opened up. We're producing as much oil as Saudi Arabia is. So it's a different ball game. You can't expect a perpetual up move in crude oil. It's a
Okay.
trading range affair.
Okay. This may not be a long and short, but you have mentioned some of the central banks. I'm going to ask you again. Out of the Central Federal Reserve,
Well, the Federal Reserve,
are they doing a good job?
yes.
Okay.
The economy hasn't crashed. Okay.
Okay.
So sure, they're doing a good job. They're
Okay.
doing what they need to do. They're increasing money supply rapidly. They're keeping interest rates low. That's good for the economy. After all, we've been in a 5-year bear market, a 5-year bull market. 5 years from that 2009 low.
Well, all the time they were injecting.
All the time, and helping.
Right.
At some time, they'll pull back a little bit, but not yet. I'll come back in 2017.
Okay.
We'll talk about it then.
Okay.
But I think they're in a position they can't stop what they're doing. They're addicted to money at this point.
All right. But okay, so 2017, you're going to come back and say, "I told you so." Okay. Continuing the central bank, ECB, European Central.
Well, I think what's going to happen there is the impact that we'll see as traders is on the dollar index. And I think we're going to see the dollar index strengthen in here. And so the bottom line of all this economic activity is how can I make money at it, right?
Okay.
What markets will affect? And I think it will affect the dollar index on the upside. I think we'll probably see the Swiss franc a little stronger as well, and the Japanese yen. I think the Japanese yen is stabilizing here. It's going to be a much more stable currency than the big decline we saw.
Okay. ECB, one of the very, I guess upfront concern for ECB is that they started having a recovery on a European economy, especially Ireland is out of the bailout. Portugal and those people, Greece still stagnant, but then they're trying to go into the last chapter of the crisis.
Well, they have their own problems. The whole European community, they maybe they want Greece in, maybe they don't. It's so unstable right now. And I think what that means to the markets is we have markets that are trading range affairs until there's a resolution to this, which I don't think is going to happen in a hurry. I've always thought the euro currency eventually will collapse. I don't think the community can stay together. So it's a very volatile affair as opposed to a big trend move up or big trend down. It's just a volatile market.
Okay. Well, they're trying to fight the fate, maybe the event, well, I don't know, unavoidable. But then they're pretty much doing a good job at this point, though.
Yeah, they're working at it.
Because it was like worse than 2010.
It wasn't good, was it?
Okay. All right. I have to close the interview now, but if you like, a couple sentences to Japanese investors.
Get ready for 2015, a massive bull market. You want to be a buyer late, middle of October, late September. Buy, hold on to it. Go home, hop underneath the covers. Don't look at the newspaper. Just hold on to your long position. You'll make money.
はい。ということで、レジェンドラリー・ウィリアムさんこの時間ゲストにお迎えしました。Thank you very much, sir.
Thank you.
Looking forward to
Thank
seeing
you.
you again next year. Okay?
Look
Thanks very
forward to
much.
that.